All right, since we have a lot more new faces in the room from this morning that might not have heard the catchphrase for today, and I'm going to give a shout out to Dale for saying that it's okay for me to say this up here again. Our catchphrase for today is for fintech and traditional financial institution collaboration. If you want more money and clients, hold my beer. That's ours. The next panel is also going to be a lot of fun. It's going to be moderated by my new best friend, Greg. And he said that he promised not to heckle me as long as I don't heckle him. So you all have to hold us to that. And so with that, I'll welcome Greg to the stage and let him announce his panelists.
Thank you. Come on up, folks. Good afternoon, everyone. Special thanks to Peter and his team for fast-forwarding embedded real-time payments at US Bank. My name is Greg Wilford, and by way of introduction, I am with AP Technology. I am the mobility and marketing officer there. And last year, we processed roughly $140 billion with our business customers. A long time ago, I co-founded a company which became a mobile communications company. We had just south of 60 million users, and the interesting part about that is we had integrated our billing with the billing systems of the mobile payments companies in 187 countries. So that was back in 2001. And that was my first actual foray into mobile payments. And wow, what a difference. Do you guys remember buying ringtones? Remember the premium SMS? Those were the early days. And we talk about friction. I'll tell you about friction. It was not a great experience. And as we got launched, there was a lot of fraud. Fast forward, our mobile devices have become much more than that. Right? There now are video, there are camera, there are timepieces, and we're going to talk a lot about how mobile phones are now the home of touchless payments. So to that end, what we have done is we have asked several experts in the payment space to join us on stage, and we're going to have a lot of fun. So absolutely, please stay closely to the no heckling rule, and we'll launch off. I'm going to start with Deborah. Deb is not only the co-chair and Touchless Payments Working Committee person at the US Payments Forum, but she is also a partner with Pagility Advisors. And Deb has been immersed in all things payments, specifically mobile payments, for 20 plus years. So we're thrilled to have Deb on stage. Hello, Deb.
Hello.
Welcome. And we talk a lot about different organizations that are furthering and advancing mobile payments in general, right? Let's talk a little bit about the US Payments Forum. Okay, which you're connected with. How is your organization furthering the proliferation and the advancement of mobile payments in general?
Thanks for that question. The U.S. Payments Forum and its predecessor organizations, it was the EMV Migration Forum and the Secure Technology Alliance and the Smart Card Alliance, I've been involved with for over 20 years. And it's a very unique group that combines people from all corners of the payments industry. So it's one of the unique get-togethers where we have merchants, issuers, networks, processors, other vendors, other experts in the payments industry, all work together to solve common industry problems. So one of the very first problems that we solved with having to do with EMV was how to support the Durbin debit routing, which was impossible to do with the way EMV was originally conceived. So the forum put together a way to comply with the debit routing rules. So that's really getting down into the weeds. Another example that's more related to mobile is the implications of tokenization. So how does tokenization work, which was first implemented by Apple Pay, but now has been is spreading throughout the industry. It causes customer confusion if you get a receipt and the last four printed of your credit card number is not your credit card number, it's the token. So, what are some ideas to work around that? It also causes problems with merchants for things like returns. So we've written a lot of white papers investigating these problems, proposing industry solutions. Another one that we proposed and was implemented was doing away with the need for signature as a cardholder verification method. I know a lot of people are still collecting signatures, but all of the networks did away with the requirement a couple of years ago. So it's just a really hard-working group that gets down to brass tacks on solving payment industry problems.
Thank you, Deb. We'll be talking more about organizations and their contributions as we go along, but I want to introduce you to our next panelist. And Travis Delaney, many of you may know him as the former SVP and General Manager of Government Services at FIS. Most recently, Travis is the founder and of Time Is. And you want to talk about somebody who knows a lot about payments, you're about to find out. Travis has been immersed, and if you are looking at the screen right now, you can see his list of attributes on the bottom of that. They go on and on. And so we look forward to Travis's contributions throughout the session. Travis, hello and welcome to the MPC stage.
How are you?
I'm doing great, thank you. All right, so this conference has been talking a lot about faster payments. And as you so articulately mentioned as we were getting warmed up here, what is faster payments? You really have to define that a little bit. But in a broader sense, I want you to talk about whether you think that faster payments under that umbrella is helping the adoption of mobile payments in general.
Okay, well, thank you, Greg. So I think sometimes when we come to these shows, we need to have a cheat sheet for acronyms and terms, right? And because every show and every year, it will evolve and change, right? So RTP, we used to say real-time payments a lot, but then it became a trademark, so we then started talking about it as a product, right? And so these weird things happen in the industry. There's a lot of blocking and tackling in this industry. We're an aggressive industry. So when we talk about payments and we talk about faster, I heard Peter earlier say instant. Well, okay, now instant is FedNow and RTP. Well, faster is add all the other things, which includes same-day ACH and crypto and any other thing that gets there faster. Normally, the term that we kind of loosely defined was anything within 20 minutes of delivery. So if you think of Visa OCT or Visa Direct, basically, as you probably know it as, or MasterCard Send, those are all fall in that category, right? So the difference is where it goes and the account type and all of that type of thing. That's the structural differences, right? But the adoption of mobile, to me, is a byproduct. It's a byproduct, and so will these increase the uses of it? I think it will more about the channel and give more options to the consumer. A couple of years ago, we had a term, it was about consumer's choice in a product viewpoint, right? So I think we're still very heavily about what the consumer wants and the user wants. So the answer is absolutely yes. And it's just a matter of how. We constantly are looking at different peripherals and endpoints, but that's the point. It's the touch point with the consumer. And where can we maximize that utilization of anybody's eyes or usage of a device or item.
You brought up a great point, which is the consumer, right? At the end of the day, who drives all the changes? It's the consumer. So we'll dive into that a little bit more. But I want to introduce you to the next member of our panel. Rounding out our panel is Jessica Washington. We're very fortunate to have Jessica from the Federal Reserve Bank of Atlanta here. Now, Jessica has been in payments for quite a while. I want to tell you that in addition to serving as payments research and outreach for the Federal Reserve, Jessica does something very interesting and shows she's the deputy chair to a special committee on payments inclusion for the underbanked and the unbanked. So I want to address that for a little bit today, but before we get to that, I want to talk about, again, back to faster payments, Jessica. And as faster payments come, and again, I want to tell our audience, faster payments coincide with the technology to drive those, which is 5G. So we'll talk a little bit about that in a bit. But I want to talk about the byproducts of a faster payment, Jessica. Along with that, in parallel, are bound to come several changes. Don't you think? So what are some of the changes that we can expect to come as these faster payments hit our mobile devices?
Well, thank you for the question. And I know you wanted to have a fun panel, and when everyone thinks of the Fed, they automatically do think of fun. So I understand why I'm here, but the views are my own, I will say. But along with faster payments, I think as adoption does grow, we will see new use cases where the penetration really starts to get into the consumer-to-consumer products, or really meeting that end consumer where they are, whether it be reimbursements for sharing services with friends or family, gifts from friends or family, paying for services like babysitting, dog walking, those kind of things. And then as we start to see B2B adoption grow with the efficiencies that faster payments offer, and thank you for offering the nuanced definitions because they are not all alike. But we will see that B2B adoption for large sweeping investments, maybe some borrowing from the wire side of the house. But with that does come thoughts of fraud and security. I know Peter mentioned it's not built in such a way that makes it weak, but we know that with that scale of consumer coming into the adoption space, there's going to be an attraction for fraudsters to be ripe to any of those new services that we see developed. And we know we'll probably move much more away from a closed loop faster payment system where everyone has to be part of the same faster pay overlay services, and more into an open loop scenario, which opens up opportunity, but also, again, some risks as far as the interoperability and the addition of parties that might play in a certain transaction when we go into that open loop realm. Of course, we start to think about how efficient it is, but how security really has a great deal of potential with the mobile devices now being so advanced, and having the ability to have apps with machine learning or behavioral analytics and behavioral biometrics, having those digital identities kind of embedded into our faster payment options give us a chance for enhanced security. So, as much as fraud risk, grows, we do see a lot of potential with the opportunity to really have that embedded, finance and opportunity for additional security in different channels.
Thank you, Jessica. And when you talk about opportunity and fraud and so forth, I think it's good to give a perspective of what that actually means. And so I laid a statistic on the group yesterday, and I want to reiterate that because to me, the number is so huge. Bloomberg came out with a stat in May of this year saying that digital wallet space in 2031 will be 16.2 trillion with a T dollars. So the amount of transactions that are happening on our mobile devices are growing every year. We're going to talk about how that can actually be furthered by programs to help the underbanked and so forth. But I want to talk a little bit about the bad guys for just a second. So through your perspectives, all three of you, are we doing enough to protect our payments, or the bad guys ahead of us? Travis, why don't you start?
No.
Okay. What do you real feel about it?
It's I think we've, in the focus of our industry, we seem to be inward focused a lot, right? And so as much as we want to please the customer and help adoption and really give good user experiences, we also have not allowed the consumer to have a part of it. They're not a stakeholder. They're a user. They're not a stakeholder, right? So part of RTP and what attracted me to RTP initially even was the fact that it has this request for payment that had an explicit approval by the consumer on the other side, right? So that's to eliminate that overdraft, that NSF, that bad feeling. You know, how many have not got one NSF, but 3 off a $15 charge, right? Because it stacks up on you, right? And depending on how they do that. So this was all to solve these consumer touch point issues. But I don't think we've really, and with RTP, it hasn't got to the point where we've been able to give explicit approvals yet. And we have some banks even auto-approving type of request for payments. So in my opinion, we need to give the consumer back control of their money.
Okay, and let me draw the conversation back to the touchless payments a little bit. Deb, do you and Jessica feel like the rise in fraud and in regards to what's happening on the mobile devices, is that hampering what will ultimately be a device that gives us all of our transactions? You know, touchless payments will only happen if the consumers have enough confidence to
Right,
transact.
well, we've spent a lot of time looking at what other countries have done because they've had real-time payments on mobile up to 10 years, like the UK. And so I think one of the big things the industry could do is a better job of information sharing about fraud. So each provider isn't like standing on its own trying to stamp out fraud. If we could raise all the boats, rising tide, raise all the boats.
Education, right?
Education, as well as pinpointing where the fraudsters are. I think education can only go so far because we keep telling people, don't send money to people you don't know, blah, blah, blah. But if the industry did a better job of sharing information about fraud, you could warn them and say, this is definitely a scam, or
Right.
don't approve this payment.
What does the Federal Reserve say about that?
Yeah, I mean, I think that mobile and touchless payments do have an opportunity to fight fraud, better with being able to facilitate like passwordless authentication, continuous authentication, because we really have to protect the front door when we move to faster instant payments. The credit push scenario, that front door is going to be very much more, it needs to be much more guarded. And so we have to really move to real-time detection as well, and making sure that we can look at payments comprehensively across payment types, because there will be mixtures of faster payments within our commerce, and being able to have that holistic view and see patterns across multiple payments. I don't think we're quite there yet, but I think that's definitely advancing. I think that we're a little behind in digital identity opportunities, but as soon as we can get up to speed with being able to embed digital identities into the authentication process, utilizing the mobile device, utilizing the touchless scenario, we'll be a little bit stronger.
And Jessica, I want to just touch real briefly, as long as we've got you here, on the FedNow project. So with all of the advancements in payments, FedNow is due to roll out in 2023. However, if you can see the stat on the screen, some folks are already using it in a pilot program. So I would imagine that fraud and fraud prevention are all part of that, right?
Right. So, we're not quite in the market yet, but we know that there will be, transaction limits in place, requirements to report fraud to the network, so information sharing, the ability to use database and alias in order to, authenticate users rather than anything clear out in the open. Is the way that they're moving.
And I just had one other point, too, about fraud detection in mobile. There are some companies that use machine learning and AI and behavioral biometrics, which is, you can do it on a laptop, but it's even better on a mobile, that can score a transaction where the person seems to be hesitant. They're being coached by a scammer. This is your bank. Please do this, and your account was compromised. We're going to transfer all your money. And so they're kind of doing it, but they're not sure, and you can actually tell that from behavioral biometrics on the device, which is amazing. That would be a great tool.
Yeah.
No, great.
Yeah.
Travis.
So much of fraud is about identifying behavior characteristics, all right? And so there is a huge opportunity, I think, to your point, with AI, machine learning, or whatever, to identify human characteristics or human behavioral trends that identify, bad actors, right? And so one of the things we tend, as a processing environment, we go through and do our KYC and sanctions and stuff. Those are government, list and basically who's trying to be good, really. So the bad guy is not going to look like a good guy. They're going to, really kind of emulate and somewhat synthetically, look like somebody you would normally accept. So we need to identify those characteristics, because our biggest risk is our front door. I think I heard you say that earlier, is that it's all about that front door that you're going to get somebody in. You're not going to get in between a millisecond transaction. It's just not going to happen. So that's where ACH fraud was in between, and the timing delay. Now it's going to be the endpoints. It's going to be the receiver and the sender, and then some kind of collusion between them.
Okay, so again, let's go back to the touchless payments portion of our program. Something I haven't heard a lot about, Travis, and I was going to at least tee this up for you, is super apps. Is that going to help or hinder the adoption of the touchless payments? And also touch on, I want to hear from each of our panelists what they think about NFC and the QR codes. I'm going to jump into that in a second, but start with super apps, Travis.
So super apps, I kind of lumped them together from the context that we're talking about with embedded finance, because really what we're talking about is a transaction happening without you explicitly doing anything. Maybe you're shopping, and you get a rebate back, right? So you're instantly going to get that back as you pay, but it's all going to be behind the scenes. So you just see basically the end result. And so, there's a lot of opportunity in those categories for us to have more challenges. Right?
I've done quite a bit of research on super apps, specifically the way it's rolled out in China and a couple other countries. And somehow I don't think it's going to catch on here. The key to that was that it was kind of like a walled garden with these mini apps, mostly for shopping, but also for ride share and everything. And it was all stitched together with payments. And the conception that Walmart and maybe PayPal came up with for a super app is more just around financial services and not shopping. So I don't know if it's going to catch on.
I agree.
Yeah.
It will be interesting to see. One thing that is certain is that folks like to spend money on their mobile phones. Convenience is king, and if there's confidence around security, that will help a lot too. I'll draw your attention to the slide currently on the screen, and the amount of money being spent by proximity mobile payments has increased, steadily. And a lot of this has been pushed forward by the pandemic, right? But I think now the rubber hits the road, as they say, as people are getting used to doing mobile payments. Are things like the QR codes and the NFC chips in cards that we have now, those kinds of things, are they going to help really, and do they open more doors for fraud? So do you see, Deb, like QR payments, is it good, bad, indifferent?
Well, I remember a few years ago, we used to call QR codes a poor man's NFC. But it actually, it works better than I would have ever anticipated.
They're coming back, and you see them everywhere.
Right.
My company, we embed the QR codes now on checks, not only as an added layer of security, but there's some wonderful things you can do with QR codes in terms of,
Digital data.
Exactly, digital data, and I'm a marketing guy, so you can actually send people to a website. It's just, it's a neat tool.
Cool. It is, yeah.
It is.
But I think we kind of went down the NFC route, and there was an article in the Wall Street Journal yesterday kind of touting Apple Pay, saying it hasn't been as disappointing as everyone thought. But, when Apple Pay was first introduced, was it 2015? Only 2 or 3% of POS devices were NFC enabled, and now like 98% are.
Wow.
So,
Okay.
And they also said that 80% of iPhones are enabled with Apple Pay. They didn't say what percentage, well, how often they're used. But anyway, it's long and patient. And I think the fact that Apple really didn't plan to make money off Apple Pay, they just want to make the iPhone more valuable overall, that, it was an evolutionary path to success that took longer than we expected.
I think we're going to see a lot of things come about as 5G propagates and as it really becomes real and people can figure out what you can do with a mobile phone. One of the things I really wanted to dig into a little bit, Jessica, was inclusive banking, right? And what the Federal Reserve Bank of Atlanta is doing in terms of really helping those folks that are unbanked or underbanked.
I did want to share some follow-up data, though.
Sure.
So based on our consumer payments survey and diary, I think Dave mentioned it earlier today, we do know that just over 80% of consumers are adopting the top 3 payment mechanisms, whatever they are, so cash, debit, credit today. We know consumers choose their payment options based on cost, the perception of cost and the perception of security, and also convenience. So to speak to NFC, it is much faster than a swipe or a dip and offers that level of convenience. And when we move into the wearable devices, I think NFC is a winner. I've been having a hard time with the QR code payments. They don't always work. The camera's dirty, or like it's glossy, or it's just not quite as convenient to me. And we know that consumers choose what kind of payment to use based on the value of the payment and the payee, who they're paying, whether it be a bill payment or a grocer or even rent per se. And it also matters about the location. So there's all sorts of factors that will play into whether or not one technology kind of advances over the other. But for payments inclusion, what we've been thinking about at the Fed, we have a special committee that's working with a public-private partnership to understand cash-reliant consumers and what barriers to digital adoption they might have. And then also what are the benefits to digital payments that actually offer sufficient incentive to get cash-reliant consumers to adopt in a safe and fair and equitable way. So we're really challenging, how to think about digital payments adoption and what ways we can really sufficiently make it more available across the board.
So we put out the Faster Payment Council put out a financial inclusion paper recently. I think also articulate a lot about the characteristics of the financial inclusion side of things, or the unbanked, or however you want to call them today. But they have a different behavior. And actually there was a panel up here about minorities yesterday that I think that within certain cultures and within behavior patterns, there's things that we're just not quite supporting as an industry as a whole. So the more we can provide certain characteristics to those individuals, the more adoption we're going to have. We tend to always be looking backwards. This is what evolved. You said top 3 usage, consumers always using it. Maybe because that's the only options. That's the 3 options. If we look at, going back to QR codes, I want to kind of talk about, bring back to touchless a minute. To me, all that is just an endpoint. It's no different than what we called form factors, right? Plastic, smart card, metal smart card. It was all about differentiating this to catch attention and/or provide additional services. There was a company called DaVinci Card at one point, had a little button where you could push on it and it would switch the card type. So you could use, Amex in one transaction, your MasterCard, so you could manage your rewards or whatever the point was. So I think all this is just an endpoint of where the customer is interfacing at. And the point is that needs to be secure, and if it's not, they're going to have to be security walls established around, like QR code. Why isn't that a validated way to validate? It's a real one versus a fake one, versus telling somebody, oh, make sure it's who you send. How can you tell? They're tiny URLs. I can't tell you what that is, right? So that's the problem. we focus so much on product, we don't look at the whole life cycle like Peter was talking about before. And we need to more look at, who's acting. In the very beginning of this life cycle, there's a consumer that's going, pull out a wallet, a phone, or something so that they can get out their stuff, or that they're buying online, or they need to send money. It's all about money movement, right? And it's just about what that interface is.
Very true, and how far payments have come in just, only 10 years, right? And there's so much innovation been happening on our mobile devices with the speed with which we receive information. I want to talk a little bit before we wrap up with your final question, which is going to be a lot of fun, by the way. I'd love to hear each of you and your view on regulation, because we've talked about this, and I've heard several sessions bring up regulation, the importance of regulatory with regard to, furthering the payment industry. But I think a lot of times regulation stands in the way of innovation, right? So, Jessica, if you don't mind me starting with you, I'd love to hear, your take on regulation. Do you think it's a necessary evil? Would you like to see, rules loosened and let innovation go and then, corral the folks? Or what's your take on that?
Yeah, I've always been in favor of functional regulation, because with the rapid digitalization and innovation happening today, we're really kind of based on the parties. We're regulating the parties rather than what is really happening, what is the function of the product or service. So I've always been more in favor of that type of approach. I also think we need to dig in a little bit deeper to some of the use case scenarios. There's innovation in the way that we can now prepay for our utility bills, but in some states it's still illegal to prepay a utility bill. So there's legislation and really state by state issues within different use cases that I think we need to uncover that will inhibit some innovation if we don't become aware of those situations.
So regulation can be a force of good if applied properly.
Yes,
Okay.
It's necessary because we need to all know how to play in the sandbox together. It's the hot potato. You
Good
have it,
idea.
you're liable. I have it, I'm liable.
Yep.
So.
Deb, I know you have some strong opinions on this.
Yes, I would like to see a regulatory framework that would allow for the industry to share information about fraud without fear of antitrust or privacy issues or whatever. And the other thing that came up yesterday is some dissatisfaction with the CFPB as far as regulating P2P payments and who's liable for fraud losses. That's also been kind of a hot topic in Congress with, specifically, they keep beating up on Zelle in particular. So that's something that the industry should sort of take steps before the fact,
Okay, so I want to get an answer from you, Travis, but I'm going to ask you to keep it kind of short because we're winding down. I want to make sure we get our last question in, and then maybe we can get a couple questions from the audience as well, okay?
Okay. So regulation is not a stifle for innovation, except if you're a bank. So, as a fintech, you can do pretty much what you want. It's just about follow the rules. To me, I've always seen it as, look, the reason why the regulation is there is because somebody screwed up at some point, and they had to put a regulation in to make sure somebody else didn't get hurt. So, let's face it, they're always behind the times. So you got to understand where they're, coming from. And banks, their risk managers are fearful of losing their job if they make wrong decisions. So they don't necessarily say yes, they'll say no instead because they're fearful of that regulator, right? So I think that there's missing things of camaraderie and working together. There's certain states have really brought out regulators to really understand more. There's been a lack of understanding on business and everywhere down from the regulator to the bank to the merchant of really, well, why would you do that, right? Because they don't understand business enough. So there's education, there's a lot of things for improvement, but it is absolutely necessary.
Thank you, Travis. Tough to get everything in a short session, but I want to wrap things up by throwing in my panel a curveball. And AP Technology is in San Diego. It's where I hail from as well. And we recently were host to Comic-Con. If you know what Comic-Con is, it's all things Marvel Universe, all things comic books, superheroes. So, channeling that, what I want to do, and I want to ask each of the panelists, I'll go in order that you were introduced. So Deb, you're first up. You are a superhero. Using your superpowers, what, if anything, can you change about the mobile industry going forward?
I just saw Batman, the Batman, and the name of the movie is, and I thought it was fantastic. So if I was Catwoman, I guess, I would like to be able to make it so that I could confidently go into a store without my wallet, with no cards, and make sure that I could pay, not to have the card as a backup.
Yeah, and do it safely too,
Yes,
right?
yes.
Awesome. Okay, Travis, you're up. You're a superhero.
I am Big T. For truth. Somewhere between what you hear in the press releases and the reality is the truth.
I like it. Okay, hey, the truth will prevail. All right, Jessica, superpowers, go.
Yes. So I definitely have to be Spider-Man, otherwise my 4-year-old would kick me out of the house. And I would, since NFCs take 12 seconds, swiping takes about 27 seconds, cash transactions about 34 seconds, I think checks take about 3 minutes, maybe longer in a checkout line. So I would be Spider-Man and I would web all the check writing in the retail line.
Poof, poof, we've all been behind somebody, right? So very good. On behalf of the payment gang up here, I want to thank Jessica and Deb and Travis. They've been wonderful. Do you guys have any questions for them before we surrender? Damon, I see your hand up.
So, what about 50% of American adults and over 80% of USTs have an iPhone? Is there a fear from a regulatory standpoint of a hardware company having so much power when they're now afford major forms of transactions?
If I heard that right, there are a certain age group, a demographic that has devices. Are we worried that one company has too much power? Apple.
Apple.
Teens, adults, and that being positioned a lot of going forward, is there a fear of a hardware company having a power?
Well, I guess that might lead to some privacy regulations.
There's always
Yeah.
a danger in that, right? And we haven't talked much about data security, but data privacy is also a big one too. So if you're asking me, I've been involved with 2 companies that were amongst the 20 most searched for properties on the internet, and we had tons of opportunity to sell data. And it's just not the right thing to do, right? You've got other folks that don't play so well.
Yeah, Apple has always made an issue of they don't sell the data as opposed to some of the other guys.
But there's also a basic understanding, right? And unfortunately, in life at the moment, and where we live today, there's certain principle. And I was in a faster payment committee with the Fed in the beginning, that task force, and they had asked me once, because there's this infighting between the banks, the big banks, little banks, of how they're whether we do Fed now or we don't, all this stuff. And they had asked me, he goes, what do you think is going to be the end result of this? And my comment was simply this, and it's the same answer for you. He who has the most money wins. Now, unfortunately, it is that way, right? And so there's a lot of movement and shipment, but there's things that I think we'll see in the industry over the next couple years from major organizations that will completely redirect everything we know today. That's
Great
why we have
question,
these
though.
conferences.
Great question. Always cause for concern. So we'll do one more, and I'll come to you in just a second. I want to invite anybody else that would love to ask questions of our panel. Please do so, and that way we can keep under the time limit. Yes, sir.
What do you think about cryptocurrency as a payment mechanism for most important? Is that a any discussion of that?
I consider that as part of faster payments, right? So it's an avenue. So in other words, if you think about crypto, and to some extent, it's no different than an RTP rail or a Fed. Now it's a rail. It's a way to, it just has a different mechanism of getting there. So to me, I see it's just as a viable option. It will become, in the beginning, everybody's saying, I'm a crypto this, I'm into this. Why talk about that? Talk about the value you're delivering, right? Because it has nothing to do with the infrastructure and the technology you're using. So I think as it becomes more mainstream, just like Zelle started with P2P, a lot of other, Venmo started with P2P, it's kind of done the same. It's kind of a lot of P2P action. So it'll start moving into the banking and the business arena also.
Thank you so much. We had a wonderful time up on stage. We hope you did too. Again, I'll ask you if you want to come up and ask folks some questions. Thank you. And no heckling. That was super nice.